This is Bodhayan. I head the business for Zopper InsureTech. As Shyam sir was talking about an alumni insurance program. So we have done certain work in this field, and we have been able to, get alumni associations on board for a particular product that we have designed, and it's run completely across technology. We will talk about that, and also, just to raise some sense of interest, we have got IIM Bangalore, we have got IIM Kozhikode, and now we are rolling it out for IIT Madras. We also have got an exclusive mandate for IIT Roorkee. So that's how we reached out to your alumni association as well. And Shyam sir was kind enough to give us a chance to present. So having said that, I have my team members, Monica, who drives.
Hi everyone.
Chief leader for this particular business. Yeah, so, and we have Vivek. Just a minute, Monica, let me hand it over to you. We have Vivek. Vivek is the branch head of Hyderabad, and he leads the business for Hyderabad. So how we will divide the presentation, it would be that we would talk about Zopper in terms of who we are, what we have done, and then we would pick up as on the alumni insurance product, and then we would take you. Meanwhile, you can keep parking your questions. We would explain why this product, what kind of a product this is, why you need to secure yourself in this particular program, and then we'll keep answering your questions and then take it from there. So over to you, Monica.
Thank you for that. Hi everyone. So we will be I'll be taking you through Zopper's journey, and just a second. Yeah. So firstly, we'll be covering insurance and InsureTech, a quick history. So 1819 to 2000, there was Insurance 1.0, wherein a stepping stone of IRDA was laid out. Then quickly moving to Insurance 2.0, where foreign direct investment was increased to 49% and online distribution of insurance. And that's how insurance industry quickly picked up. From 2020 onwards, which was a remarkable year where insurance industry realized that there's a remarkable need for an InsureTech in the industry, and that's how digitally embedded and decentralized insurance came up, and that was driven by demand-led evolution. And obviously post-COVID-19, insurance has been very in surge in the market, and everyone is now quite aware about how and why they need insurance into their lives. Let's quickly move on to Zopper, a journey of 11 plus years. So Zopper started in 2011, and in 2015, they raised $21 million. So Zopper had a point of sale contact business, which was sold to PhonePe, and post that, insurance business was taken up by Zopper. So Zopper always wanted to be into the distribution side of the insurance industry and not be an insurance player in the market. So we help in distribution of the insurance products across industries. So in 2018, 3 clients, 10 crore of gross premiums we had, and gradually increasing to 2019, 15 clients, 40 crore gross premium. And in 2020, 80 plus clients, and we crossed around 100 crore gross premium, which was a remarkable jump from the previous year. And 2021, 150 plus clients and 400 crores gross premium. And in 2022, last year we raised $75 million. And we raised from Creages and ICICI Ventures, Bessemer Venture Partners, Bloom Ventures, and Tiger Global are our leading investors into Zopper. And these are some industries, very big names who have shown trust in us in Zopper, and they are keen to grow in the market, make us grow in the market. And in 2023, we are through already 200 plus clients, and we have the target of 100 crore gross premium we want to move and target this year. So Zopper has a footprint pan-India. We have our corporate office from Noida. We operate from Noida. Then we have our branch offices at Mumbai, Pune, Hyderabad, and Kolkata. And Zopper has been growing immensely. We have around 700 plus employees this year, more than 200 plus clients. So some ecosystem partners across verticals where we have banks, NBFCs, and leading MFIs across industries. We have Bank of Baroda, we have Shivalik, we have HDB Financial Services, Kashi, Central Bank of India, just to name a few, RappiPay, Airtel Payments Bank. And our retail chains and OEMs are Chroma, Titan Plus, iPlus, MI, Hitachi. So Zopper has been and led an incredible journey in the embedded insurance sector, wherein if you move to a Chroma and if you purchase a mobile, the extended warranty would be from Zopper. Same with Titan Plus, same with MI. So a lot of embedded insurance industry footprint Zopper has been leading this market. Moving on to other the product lines which Zopper have is Zopper has health insurance products, GMC, group mediclaim, group personal accident, air vector-borne, hospicash, super top-up plans, which we will talk in detail later. Individual plans are also there, life insurance, wherein we have individual plans, group term life, credit life, personal accident, death cover, motor insurance, two-wheeler, four-wheeler. We have lifestyle protection. Like I talked about the embedded insurance, this comes under that. Then wellness, we have doctor on call, health checkups, health monitoring. And in the corporate solutions, we have group mediclaim, group personal accident, group term life, wellness, standard fire and special perils, business interruption, marine insurance, DNO, directors and officers, all kind of corporate solutions we provide to leading industries experts. Moving on to some customized solutions matching ecosystem specific needs. So we cater to all insurance partners. So just to give a background, because we are into a modern insurance era, the modern insurance customer, prefers very simple, customized and intuitive policies and easy process and a simple and tangible cost breakup. Insurance providers have begun to appreciate these preferences and have, put the customer at the center of the product design. That's how we've designed such kind of products which is easy to understand, and we are partnering with leading brands in the market. So insurance providers have begun to appreciate these preferences and the customers at the center of the product design. We eliminate all poor experiences along the moments of truth in his or her in any insurance adoption journey. This shift, in the product design from product to human centric design is a fundamental shift in the Indian insurance industry, I would say. And this transformation into a human centric insurance company and the product is time consuming and complicated. These designs thinking training organizations to focus on minimizing the customer effort and maximizing the customer value. That's how we have designed the start to end digital journey from a product perspective. So while technology cannot be replaced from a human centric approach, it is a very key enabler for this approach. Emerging technologies like artificial intelligence, Internet of Things, blockchain, powered by analytics and cloud can be enable insurers to develop human centric propositions. And some of the large insurers have a legacy of IT landscape that is very difficult and costly to transform. So that's how we have been doing some incredible work in this space. Let's quickly move on. These are some in the financial ecosystem. We have brands like Bank of Baroda, Vaya, Chaitanya, Bandhan Bank. In digital ecosystem, we have Ola partners. So whenever you take a ride and there is a 1 rupee, 2 rupee cost to, and ensuring your right, that insurance is provided by Zopper. That's part of our embedded insurance journey. And same with the lifestyle ecosystem, we do a lot of things around extended warranty, partnering with Chroma, MI, Hitachi, Panasonic, and Oppo. Let's move on to. So, Zopper, we are offering corporate solutions and into the SME vertical, and it's all we have are 80 plus employees who are only catering to tech enablement, and there are 80 plus engineers who sit across, and that's are the backbone of the Zopper journey, where they actually provide tech solutions for us. We enable technology into our products, and that's how we distribute very seamless journey for the customers which we have. So we enhance the customer retention and revenue with diverse insurance offerings. We provide employees with top-notch insurance offerings to enhance job satisfaction. That's how we take into group medical cover. We have group personal accident, group term insurance, wellness. We have a lot of offerings. Then merchant specific products like shop insurance or fire insurance, those kind of insurance we have. So we do claim management also with regards to insurance companies as well. Yeah, let's quickly talk about group family health insurance program, which we have exclusively designed for NIT Warangal Alumni Associations have been, and we have already been launching this Alumni Association insurance program, which was kind of a success in the IIM Bangalore and IIM Kozhikode fraternity. And now this year we are already set into the tech developments are ongoing for IIT, for rolling out IIT Madras Alumni Association Health Insurance Program. So, Badhan, you want me to stop and you want to continue from here? Or shall I? Yeah.
Yeah. Thanks, Monica, for the wonderful introduction of Zopper. So here, I would want you to put on your thinking hats as to there are insurance products, and then there are insurance products from where which actually counts and takes you a long way. So what we understood is when we did some research around, we understood that most of us are covered with the base insurance program, and either if we are working or very rarely we have found out that out of premium institutes, very rarely people are not covered at all. So when we understand that people are covered for their base insurances, if you look at the medical inflation, which is 20%, so for a heart operation this year, if it's 1 lakh, next year it's going to be 1 lakh 20 plus minus here and there, depending on which city you belong to. So that's called medical inflation. So with that kind of medical inflations in place, and the claim bills in today's world for IIM Kozhikode for one person, it went up to 55 lakhs, and that person was a hale and hearty person of 40 years old. So there's no guarantee in terms of what we're going to incur as a medical cost. And when we look at the basic coverage that people have with their employers are primarily around say 3 to 5 lakhs, and some are covered to for 7 or 10. Very rarely though, but 5 is sort of an average coverage which is there. Now, when we look at people, so around 70-80% of the alumni already being covered by base. What we looked at was design another product which comes as a second layer of insurance. So when I say a second layer of insurance, it comes as a program which allows you to choose your sum insured from starting from 10 lakhs, but can go up to 75 crores. Pardon me, it goes up to 75 lakhs. So 10 lakhs to 75 lakhs, you can choose 10, 20, 30, 40, 50, 60, 70, 75. And then what you choose, another thing is a deductible. So park your questions, I would answer them. So deductible in a nutshell would be something for which you are not covered for. Beyond that, you're covered. So if you have a base program running of say a 3 lakh or a 5 lakh, you would want to pick up a deductible of a 3 or a 5 lakh, and then build the second layer with another sum insured layer, which would be another 50 lakhs or 60 lakhs or 70 lakhs or 30, 40, depending on your age bracket and your need. So what we did was we structured the second layer of insurance for you. And another thing that we did was we integrated with the insurer systems. And so once you log into your Alumni Association portal, which would be or app, which would be the NITWAA app or the NITWAA portal, once you log into that, you would see the insurance button only after logging into that. So first thing is only NIT Warangal Alumni Association members can choose this program for themselves and their family. And when I talk about their family, it would be their immediate family, their spouse and kids. It would also cover their parents and also cover their in-laws. So when you look at the kind of insurance programs available in the market, very rarely you will find parents and in-laws, being able to come into the program. So that being there, it's structured completely through technology. So once you log in through the portal, you click on the insurance button. It asks you to put in your information is automatically fetched through the database, but you'll have to put in some information for your spouse, kids, and your family. And once you do that, you'll be able to, choose your sum insureds, your deductibles, and then accordingly you can see the premiums real time changing. So when you do that, you would be able to basically choose different insurance programs for you, your immediate spouse, also your parents and your in-laws. So in a nutshell, the ease of buying is there, and at the same point of time, it is completely knit across to technology, and the servicing is done by Zopper. So I will take a pause here, and Monica, maybe you would want to pick up the slide on retail insurance programs, which is at the later half of the presentation, and maybe explain what are the kind of retail insurance programs which are there in the market, and from there we would build it. Over to you, Monica.
Sure. So in the retail health insurance space, wherein somebody can go to any website of the insurance company or any policy bazaar or any retail space. So the health insurance which is provided is up to the age bracket of 65 years. And that too above 45 years, there is compulsory medical checkups, which is required by the insurance company before you take up any insurance policy. So they would, so insurance company would like to know how healthy and what is your health quotient, according to which they will decide whether you will be eligible for any health insurance program in the market or not. And this is across health insurance companies. You pick any health insurance leading company, Care, Niva, Bupa, any, they would require a compulsory medical checkup above 45 years of age. And then they would only decide whether they will give the insurance or not. And the age bracket is up to 65 years. So if you are taking up an insurance before 65 years, well enough, but after you turn 65 years, there is no insurance company who's ready to give you insurance policy. And the room rent definition is something which is very critical, because once you take up a policy and once you get admitted to hospital, it is very important that you want to get what kind of a room you want to get into. And these room rents are very, very high, highly priced according to the insurance hospitals. And room rent definition is something which is normally in the retail system, it's like 1% or 2% of the total sum insured you have chosen. And if we talk about how, if I'm an individual, I can cover my parents and my in-laws simultaneously in my policy. That is not at all possible. So in retail, one cannot cover parents and in-laws simultaneously. This is a very big drawback which is there in the retail health insurance. But you want to take up next?
Yeah. Monica, would you want to explain the kind of product that we have as well?
Yeah. So let me just explain this other alumni insurance program which is there in the market, which is already running, and some are already discontinued because of the drawbacks they faced. Was the age bracket was up to 75 years. Room rent was limited as per the sum insured. So 20% of copay was applicable on all pre-existing diseases claims for all dependent parents and parents-in-laws above 60 years, and 20% copay on all the claims which was applicable. I'm talking about other alumni insurance program which was there for some of the other alumni associations who took insurance for their alumni. And the sum insured options which was available was very, very low. For example, 10 lakhs or 5 lakhs, not more than 20 lakhs or so. And they can cover the option of parents and in-laws covering simultaneously was given, though, which is a very good addition. And but yeah, the claims management is not very good. The reimbursement claims take almost more than 30 days, which is a very, very bad experience for for any sophisticated alumni of a prestigious institute, or you know an individual, if per se. So the super top up which we offer to all the alumni associations are, we offer age bracket which is up to 85 years of age, which is not there in the retail health insurance, and nor there in the other alumni insurance programs which is there in the market. So we offer pre-existing disease waiting period is 1 year. So this means if somebody, for example, if I have diabetes and I declare this year while taking this policy, then this year I cannot come claim on this particular disease, diabetes, but from next year I'm able to claim on this particular disease. So 1 year waiting period is there for pre-existing disease, and this is a huge, huge gap which is there from the retail health insurance, because in retail PED waiting period is 3 to 4 years, and we have managed to come break it down to 1 year. So this is something which is very incredible in our product, one of the major selling points. And again, the medical checkups, we have waived it off for all our alumni associations. Since it is compulsory, it is mandatory for retail health insurance to take up a medical health checkup. And in most of the cases, above 45 years of age, people will definitely have some or the other kind of pre-existing disease, like hypertension is very, very common, diabetes is common. So if somebody has that these kind of diseases, one person cannot take the policy. So we have completely waived it off. We do not require any medical checkup before we offer our policy. And room rent definition, again, we offer any kind of room other than suite, and ICU are on actuals. So room rent definition also is kind of very open kind of a room rent definition. One person can go to any kind of room which is not a suite. Suite is something very, very luxurious in the hospital, so we're not offering that. But any kind of room which is other than suite is semi-private or private, any kind of room rents are available. Another major point is we do not offer any copay. We do not keep this point open. So there is no copay which we charge for parents and in-laws. So there is no copay. And we offer very high sum insured options, which is up to 1 crore, which is not offered in the retail. Sorry. And we can cover parents and in-laws simultaneously. Also, we offer personal accident cover of 1 crore rupees for alumni and spouse, and 10 lakh for every child. So these are the major offerings which we give in our alumni insurance program. Brian, would you want to add something to it?
There are some opinions on the chat.
Okay.
One
So,
says is, I think you can dwell deeper into the into your product. And then comparison can come on the way, no problem.
Sure.
There is one which said is instead of medical policy, group term insurance could be a better option. Most of us could be covered by medical insurance. Yeah. And the other one is if we already have a health insurance with a company, how it can
How
be
it can
held
be
if we want a top up. So your super top up should be important for us to hear.
Right, right. So
Okay.
to answer this question, if you have already health insurance with a company or a corporate policy, then how do we deal, how do we get the top up from Zopper? So just to inform, this is a very valid question which we got when we were, conceptualizing this particular product. So super top up product, which is offered by Zopper, it does not depend upon any other insurance policy, any other base policy, corporate policy, which is already there in the market, or people are covered into their corporate insurance. That is not at all going to affect super top up by Zopper. So super top up is going to add another layer to a base policy. If you already have a base policy, super top up can be uh, act as a add-on policy to that base policy, just to put it in simple words. So if you already have a base policy, you can take super top up policy, which will not affect your base policy. Both policies can run simultaneously, and that's how it is. Next question I will take from Prasad Kuju is, they need to concentrate on offered plan.
Madam, I am asking you one question
Yeah,
instead of
please.
writing in chat box. See,
Please.
whenever someone will use this super top up, that time it may be add-on policy, but during claim, claim should be settled percentage wise,
Okay, right.
as far as I know. Because it cannot be, suppose I have some health policy for 25 lakhs. It is not that 25 lakhs, initial 25 lakhs, that company only will pay. In that case, if it is for 25 lakhs and in your case top up is for 1 crore, that means 25% of the claim settled by the first policy with whom I had that 25 lakh policy, and balance 75% will come from your end.
Okay, okay. So I'll
That is the
quickly,
basic principle as per.
I got your question, Mr. Sudeep. So I'll quickly explain the concept of a base policy and a super topper policy. I think that will give us some clarity on this. So people generally confuse between a base policy, a topper policy, and a super topper policy. So base policy does not have a component of deductible. And base policy, if somebody have chosen sum insured of 10 lakh rupees, and that person can claim up to 10 lakh sum insured options. So that is the base policy. A topper policy has a concept of deductible. So suppose if somebody has chosen a 10 lakh deductible option and sum insured up to 75 lakhs. So up to 10 lakh, that person has to pay from his or her own pocket or through any other base policy which is existing. And post that, crossing that deductible limit, one person can claim up to the sum insured option which that person has opted. And in the case of top up, this deductible has to cross every time that person is going to claim. But in the super top up is also a deductible based policy. If a deductible is chosen, say 10 lakhs and sum insured is 75 lakhs, one can cross the deductible once in the policy. Suppose one time the 10 lakh deductible is crossed, again after crossing that deductible, person can claim up to 75 lakhs n number of times during a policy period. So there is a difference between top up and a super top up. Top up deductible has to be crossed every time that person is going to claim in the to the insurance company, and super top up only once the deductible has to be crossed, and post that person can start claiming again and again on the policy even after the claim is less than deductible. So that's a major difference between base top up and super top up. So if we are talking about how a super top up will work, when you have a already base policy or a running corporate policy, Then suppose if I am covered in my corporate policy, say for example, up to 5 lakhs sum insured, then I would prefer to choose a 5 lakh deductible in the super top up and up to 75 lakhs sum insured, for example. So that if I am, because I'm already covered up to 5 lakhs from my corporate insurance, so I can take the benefit up to 5 lakhs from corporate, and the deductible is 5 lakhs in super top up. Then if I need to claim in the super top up, I just need to show the proof that my corporate has, paid for 5 lakhs deductible amount, and above that I get all the claims settled up to the sum insured in super top up. So this is the beauty of the super top up program, which only adds
Hello,
on.
I could not.
Ma'am, if I can just add on to that, Mrs. Monica, this is
Yeah.
Ashwini here. Just continuing on the same previous question and your answer, I'm still trying to understand, and I assume many other people like me also are trying to. I just want to take a simple example, and if you can just choose some numbers to help us understand. Say, for example, I have an existing health policy of say 10 lakhs. And let us say I go for a super top up of say 50 lakhs with you, and one incident happens. Let's consider two different incidents within a year. There is one incident which requires let's say 8 lakhs of payment, which is less than 10 lakhs, which I already have in the base policy, and another incident few months later within the year, which is say about 20 lakhs. Now, how are these amounts going to get settled? What will be the role play of my base policy as well as your super top up? And I also understand these days policies are also smart, where they say that if you have completed your coverage, then we can also do certain add-on of double or triple or certain bonus kind of things. So these two examples, 10 lakh base policy, 50 lakh yours. I get a particular bill of say 8 lakhs, and I get a bill of 20 lakhs. And how will they get through? If you can help us answer that.
Monica, I'll take this.
Yeah.
Thanks, Ashwini. So this is Bodhayan. So I will answer your question. I'll also answer Sudeep's question. Thanks, Monica, for explaining to us the construct of the products.
Sure.
So Ashwini, we'll put in some numbers. Are you able to hear me, Ashwini?
Yeah.
Yes, I can. Yes, I can. Please go ahead.
Yeah.
Please go ahead.
Sorry, I'm on the road. That's why
Please
I was checking. So I'll answer Ashwini. So I'll pick up some numbers which will make it easier to understand. First is the program that we are bringing in is not a base insurance program. It is a second layer program, which is the super topper program. Now I'll put in some numbers for everybody to help understand this. So suppose you talked about a 50 lakh sum insured that you have picked up, Ashwini. For example, you pick up in the NITWAA alumni insurance program as a super top-up, and you choose a deductible of 5 lakhs, for example. So what you have chosen in the super top-up is a 50 lakh sum insured. Sum insured means that up to 50 lakhs, it will get paid. And you have also chosen a deductible of 5 lakhs. When I say a deductible of 5 lakhs, it means up to 5 lakhs, this amount is not going to get paid. Any claim amount is not going to get paid. Now we'll take two claim examples. As you said, the first claims example is 8 lakhs. Right, Ashwini? That's what you said?
Yeah, that's right.
Okay. So first claim, suppose Ashwini, let's not take Ashwini, let's take X. Some X takes up this 50 lakh and 5 lakh deductible program, and then there is an 8 lakh claim in X's family. So for the first 5 lakhs on that, X has an option to, if X has an insurance program, if X has a base insurance program, which can cover it up to 5 lakhs or 8 lakhs, X can resort to that. Or if X suppose do not have any program, in that case, X can pay from his or her pocket up to 5 lakhs and then get this super top-up triggered. So what needs to be done is that, sorry. Okay. So what needs to be done is the deductible needs to be crossed. So the deductible of 5 lakhs in this example can be crossed through own funds, which is option 1 in case I do not have an insurance program, or can be crossed through a base insurance program for 5 lakhs. And then in that case, Ashwini, what would happen is that in that 8 lakhs claim, you can claim 5 lakhs through your base insurance program, or you can claim 8 lakhs if your base insurance program covers you up to that limit. You can take the entire claim out of your base insurance program, or you can claim 5 lakhs from your base and 3 lakhs from the super top-up. That's the first claim that I'm talking about. Now, the beauty of super top-up is, as Monica explained, that you need to cross the deductible only once in your policy year. So in claim 1, X has already crossed the deductible. Now, suppose another claim of 20 lakhs comes in his immediate family. In that case, the entire 20 lakhs will get triggered in top-up, in super top-up rather, because the 5 lakh deductible has already got crossed in the previous claim. Ashwini, I'll take a pause here. Am I able to explain, or do you have anything in your mind?
Yes, definitely you are taking the right example. I appreciate. I think you are going through. So basically, that whatever deductible that we have chosen while taken policy, that
Correct.
deductible has to be crossed once, either by our own pocket or base policy, whichever the ways.
Correct.
After that, remaining amounts once, twice, thrice in a year will be covered by the super top-up. That's what I'm hearing.
Correct.
Irrespective of different, first time it could have been for the person X, or second time could have been someone in X's family or in-laws, whatever, doesn't matter.
So Ashwini, I'll explain. I'll explain here. So when we talk about everybody into the insurance program, there are 3 policy combinations. So you'll have to understand that the deductible needs to be crossed at the policy level. So the first policy combination is X, which is the alumni of NITWAA, X's spouse, and up to 4 kids. So alumni, spouse, and kids is the first policy definition. Then there are up to 2 parents, which is the second policy definition. Then there is up to 2 parent-in-laws, which is the third policy definition. So Ashwini, to answer your question, you will have to cross the respective deductible of every policy definition in case you would want to claim in a particular policy. And you can also choose different sum insured. So what happens is, for an alumni, Ashwini, your age would be lower, but your parents' age would be pretty high. So in insurance parlance, higher age brackets, higher sum insureds actually ask for higher premiums. So how the other alums normally go for it is, say, for example, X is an alumni of NITWAA. X for immediate spouse, kids, for that immediate family combination, chooses, say, 75 lakhs at a 5 lakh deductible. For up to 2 parents, X chooses 30 lakhs, and up to 2 parent-in-laws, X chooses 40 lakhs, depending on their respective insurance coverage. And the deductibles can also be different. So for immediate family, alumni, spouse, kid, X chooses a 5 lakh deductible because X is very well covered from their corporate insurance program. But however, parents normally are not covered to that extent. So X chooses a 3 lakh deductible for both parents and in-laws. Am I able to again explain, Ashwini, on the policy structure and how it's going to trigger the claims?
Yes. You are absolutely right. Please go ahead. We are listening. Yes, it's clear.
Right. So this being there, and I think Sudeep also asked a similar question where he said that, so another thing, Ashwini, before we move on to the other question. So in this program, so what you were comparing with that, the sum insured going double or something like that, if you don't claim, they are retail insurance programs. And retail insurance programs, as Monica explained, the biggest problem is medicals. So anybody beyond 45 years will have to go for medicals compulsorily, and there's a likely chance that we'll not be able to get our parents and in-laws into the program. That's there because until unless they are like and in India, if you look at the data, 85% are either diabetic or suffering from hypertension or both. Some are diagnosed, some are not diagnosed. So that's how the thing lies in India. So ideally what happens is retail insurance programs will have a medical coverage. Will have a medical qualification criteria. It will not have very high sum insureds. We will not be able to pull in our parents, will not be able to pull in our in-laws. So ideally, it's a pick and choose kind of a program, and there are a lot of ifs and buts in the program as well. So in order to make them attractive, some of the insurers do give a doubling of sum insured or something like that. Those are retail programs. Now, quickly, when we talk about the Super Top-Up program, in this Super Top-Up program, there is only one negative list. And that negative list means like cancer, fatty liver, grade 3. So we have we fought with the insurers and we got diabetes and hypertension off the list. And we said that people who are suffering from that will need to be put into this insurance program. However, anybody who is suffering from cancer, we know that that person has cancer, or that person has grade 3 fatty liver or something like that. In that case, there are some 6-7 definitions which we have done a lot of to and fro with the insurer and hence got finalized. They will not get added into the program, but other than that, everybody else can come into the program without medicals. Now, when you look at this kind of an insurance program coming in, how it helps is phenomenally, because higher sum insureds are the need of the hour. We are covered only to the tune of 3, 5, 7 or 10 lakhs. And we think that that is enough. But trust me, I've seen claims right in and throughout. And also, what should also give you a lot of confidence is that I am Bangalore alums, I am Kozhikode alums, and IIT Madras alums now. They are all picking up this insurance program that we have built. It is important to understand that everybody needs a higher coverage. But then the question which comes in is, am I able to get everybody in? Am I able to also, so another challenge which is there in any kind of alumni insurance programs is, so when you walk into your corporate, I wonder, this question would definitely be parked somewhere in the chat box, and I would answer it right away. That when you walk into your corporate insurance program, you see that everything is covered from day one. Now, you have to understand that corporate insurance programs are employer-employee insurance programs, and 100% of the employees are covered. In the case of alumni insurance program, it is a non-employer-employee program, A. However, the more critical component is it's a selection-based program. When I say it's a selection-based program, if NITWAA has 50,000 alums currently, we might see only 1,000 people coming in. And those 1,000 people coming in into the insurance program means to the insurer that maybe these 1,000 people would come and claim back in the policy. Why the entire 100% of the population is not coming in? So it's so when a selection comes into the criteria, as an insurance program, 99% of the insurers go away. And when we did the market survey, we found out a couple of insurers who were ready to underwrite this premium community of the engineering and the medical colleges like IITs, NITs, and IIMs. And on that, we were able to negotiate a 1-year wait period on the PED. So a PED would be a pre-existing disease. If you have diabetes or hypertension, in that case, there will be a wait period of 1 year. However, you'll be able to come into the program. Now, I am Bangalore alumnus. When I took the insurance program, I was able to bring in my parents as well. They are 69 and 70. This is just an example to explain how the products are different and why they are not like the corporate insurance programs. Shyam sir, maybe we'll move on to some more questions which are parked, which are not answered. If you may kindly help us.
Yeah, there is one question from Prabhakar Rao Garu. I understand that super top-up is recommended. For example, if I have a family plan of 20 lakhs cover policy and I aim to get a total of 75 lakhs, what would be the premium? Does super top-up also go for a cashless treatment? In case of hospitalization, who will have to be consulted by the hospital first? If during treatment it goes beyond 20 lakhs, should the hospital contact Zopper for the additional amount to meet from top-up?
Right. So first thing is, the premium would be dependent on the age bracket and the sum insured chosen. So there's a premium chart which comes in. So the premium would vary depending on the age and the sum insured. That's one. Second is, yes, cashless is available for a super top-up. And how a super top-up can come in as a cashless is, so in case suppose somebody gets hospitalized in the hospital, and we see that the claim amount is going upwards of 5 lakhs or 10 lakhs, in that case, the hospital desk, insurance desk will connect with the corresponding person and will ask that whether you have another parallel insurance program or not. In that case, when you say yes, you will have your e-cards for this insurance program. You can submit your e-card, and you will have to submit the proof up to your deductible, the payment proof up to your deductible. If it is part of the same claim, then you need not. The hospital already has that, or the insurer already has that. In that case, it need not be submitted. But otherwise, if the hospital says that how to trigger it, you'll have to submit your e-card, and we have Zopper employees who can assist you through the program, through the cashless program. However, if cashless is not possible because you have gone to a hospital which is not in the network, although there are 8,000 plus network hospitals with the insurers that we work for, God forbid you've gone to a emergency case, gone to a hospital where it's not in the network, you can still come back and file for a reimbursement. Zopper team will also help you with that. Have I answered everything, Shyam sir, on that question?
I think so. Prabhakar Rao garu, anything else you want to hear? I think it is answered.
Yes, sir.
Next, we move to Prasad garu. What is the age limit for children? Can they be adults?
They can be adults. They are included up to 25 years.
And can you present the program first with all inclusions and exclusions, please?
Yes, we can do that. We will schedule another insurance session. So this was more of, warming you up in terms of what all is there in the market, what you can get and what we have created, and why other alumni associations and alums of IITs and IIMs are showing a lot of interest in our product. We wanted to talk on that. We will do another session maybe next week where we come in and talk about our insurance product that we have designed.
Sorry, I have two more questions, please.
Yes, please.
One is, who is the insurer in your program?
We have multiple insurers. I think, Sudeep, you're talking, if I am able. Yeah. So, Sudeep, we have multiple insurers in this case, and it depends on the kind of a product construct that we go ahead with. But normally, if you talk about a PSU like a New India or an Oriental or a United India, we are not working with them because they are technologically not that enabled. This entire program is knitted across in technology. So, having said that, these are all insurers with who have claim settlement ratios upwards of 96%. So you need not worry on that. We have
No, I am simply asking the name. At least you tell us few names with whom you are working.
Sudeep, they are private insurance companies. I can tell you this much. Once we do the next session, I will come up with the names that we talk about.
Okay, next session, you please clarify who is your insurer and with whom you have reassurance program. Okay.
What do you mean by reassurance program, Sudeep?
This particular insurance covered by some reassurance, like it can be through GIC or somebody like that. I like to know who is the
Sudeep,
that.
Got it. Sudeep, so I think you have some amount of insurance knowledge which I can gather. So I will appreciate that, but also clarify that I think you're talking about a reinsurer.
Like reinsurance. Correct.
Yeah, like a Munich Re, a GIC, which is Indian owned, or a Swiss Re, that kind of a reinsurer. So for health, Sudeep, it's all in the net of the insurance company, the direct insurance company. So you need not worry. They are all they're built into the treaty capacities. If I am able to explain what a treaty capacity is, a treaty capacity is a treaty for a particular product line, like a health, a fire, and engineering, which is already pre-negotiated with the reinsurer. So in this case, in India, in Indian market, the health programs are normally on the net, which means that suppose the insurer is a Digit or a Care or a Tata AIG or a ICICI Lombard or a New India or an Oriental, all of them would pay claims from their pocket. However, I will explain, Sudeep, since you raised this, a very interesting question. So suppose there is a claim of a power plant, for example, of say 1,000 crores. In that case, you will see that 5% will be paid by the direct insurer. Rest 95% will come from the reinsurer via the direct insurer. So that's where the reinsurance happens. In health, it is primarily on the net of the insurance company.
Okay.
Right. Thanks, Sudeep. Shyam sir, any other
Can
questions?
I ask you one question, sir? Can I ask you?
Yeah, please go ahead.
This is Mr. Prasad.
Yes, sir.
This is Mr. Prasad. Sir, what I have understood from your presentation, you are just pointing out how your top-up is going to be different than retail insurance.
Right.
Basically, you've given an insight of your top-up insurance, super top-up insurance, how it is going to be different than what is a retail insurer is going to give us. Correct?
Correct.
Here, what we are interested in, what we thought that you're going to present your plan. and what are the minimum number of entries you want over a period, and so that you can also get into the profit of it. You should have, like you said, we are at 50,000 and it's only 1,000 people are coming. There's no point for you to come here.
No, but still there's a point, Prasad sir. That's a very relevant question. Actually, that question normally none of the alumni bring in, and you're actually thinking from our side. I appreciate that, Prasad sir. So I'll answer that. First thing is, this is a selection-based program. And if I now walk up to Shyam sir and say, Shyam sir, I need the entire data of people who would, apply for this insurance program, Shyam sir would show me the door. And anybody who is the president or secretary or heading the alumni association would show me the door, because nobody knows how many people would come into this insurance program. When I first spoke about this with IIM Bangalore, there was no data. For IIM Kozhikode, there was no data. Even for IIT Madras, which we are rolling out this month, there is no data. So what needs to be understood here, kindly mute yourself, please. Thank you. So what needs to be understood here, Prasad sir, that we have already negotiated that with the insurer, that, we would have to look at some numbers, I agree, and which is roughly between, 500 to 1,000 odd alumni coming in the program. So I would share certain statistics. IIM Kozhikode first year, there were 600 alumni who had come in with their family. So around roughly 2,500 odd lives. And this year, in the second renewal, IIM Kozhikode have come up to 1,100 alumni and around 4,000 odd families. And if you look at IIM Bangalore, you will see that approximately 1,600 odd alums had come in, and approximately 7,000 odd family members had come in. IIT Madras are 50,000 plus. So IIM Kozhikode is basically 12,000 odd alumni strength. IIM Bangalore is 25,000. IIT Madras, we are very positive. It is 50,000 plus, and NITWAA is 50,000 plus. So to answer your question, Shyam sir, I think somewhere, and Prasad sir, somewhere between 500 to 1,000 alums, we should be good to go based on the premiums that we have been able to get from actuary.
Sir, this is why I'm saying is I'm from Qatar. We have got a program for blue collar workers. We have a program which is called 100,000 reals. We are giving it at a low premium, and the company which is giving us here is across. First, it was only for Indians. When we found that Indians are becoming difficult, it has been negotiated. It has been opened up for across all the continents, like Indians, Nepalese, Bangladesh, etc. We have covered. Apart from that, it's a low premium, and it's only 100,000 reals, means it's about 22 lakhs, something like that, for a death. But there are all limited cases. They are not health insurance. They are only just one-time disease or death risk insurance only.
So that's an indemnity product. That's an indemnity product, Prasad,
so what
that you're talking about.
That is what we are trying to do, and many of the donors are there to make the companies, they make the workers, etc. That's a part. Here, basically, what we are interested when Mr. Shyam has announced that a health program is a must, is a lucrative offer. Mr. Shyam has brought us all from Zopper. We have seen fantastic. The insight what you have given is it is not a basic insurance. It is only top up. Because everybody should have a basic insurance. We are trying to give us extra benefit of over and above the basic. There are a few questions which will be asked once you present what
Prasad,
is
sir, if you may allow me.
When you present your total plan, we'll be very happy to ask questions.
Right. Noted, Prasad, sir. What I'm saying is we can also structure a base insurance program. But my experience says that base insurance programs, the numbers are very, very low. Now, what you will have to understand, Prasad sir, that Qatar and Middle East insurance is pretty much well developed. India, first of all, the insurance programs in India, the medical insurance programs in India have a jurisdiction as per IRDA regulation, which is Insurance Regulatory Development Authority. Like RBI, there's a watchdog in insurance. In India, IRDA, as per IRDA guidelines, the programs has to be based out of India. But what I'm trying to tell here is, we need to understand that base insurance program can also be designed. I have a product of base insurance product, but alumni associations normally are asking for super top-ups. My product is not only a super top-up, Prasad sir.
I totally agree. We have got no questions on that. Super top-up program, coverages, age limits for the children, spouses, all those things will give us a broader outlook how to go about it, because everybody
Yes.
knows what is an insurance, sir. Health insurance,
Right. So
particularly
Prasad
every
sir,
Indian has.
right,
Yeah.
right. So Prasad sir, now if I tell you that we are able to pull in up to 85 years as an age bracket, that is a fantastic thing which is there in this Super Topper program. Now, why I'm
My first question to Mr. Sham, was it covering more than 765 or not? He said it is coming up to 80. That's why I came into the meeting today.
absolutely, sir, absolutely. That's
Okay.
what I'm saying.
Shall we move to the next one, please? Can NITWAA
Yes.
members opt only for AS, LM plus spouse insurance? Will it have difference in premium compared to ASK family? I think yes.
Yes, yes,
Yeah.
yes, sir. They can. They can.
Okay. Guys, any other questions? Otherwise, we will take this as a starting point. And based on this, I want all of you to please speak with your respective chapters. We ultimately had 24 participants. We have one more question, if I'm not mistaken. So Prabhakar Rao Garu is asking, need details on the premiums, etc. in case I want to cover insurance for the employees of a company, the company with about 50 employees for a company of net worth 75 crores. So I think Paul, it
Yeah.
will take a lot more details to arrive at the premiums, right?
Yes, yes. Shyam sir, we can do that. We can connect with the gentleman separately where we would need, if they have any existing insurance policy, that we would need their claims details. So once we have that, we can come back and if they don't have anything, we would need the data at least of the employees who are there and their families.
So
Who all
Prabhakar
need
Rao
to
Garu, can we take it offline? We'll take it off.
Yeah.
Please
Yeah.
connect. And
Hello.
yeah.
And
Yeah,
Sanda,
this is Prabhakar Rao. Yeah.
Okay.
Sanda, Sudip this
Yes.
side. See, basically, in all our chapter, first of all, we have to gather data and all the details. Then only I think they can tell us the premium amount and all these things.
No, Sudeep sir.
Absolutely.
Sudeep sir, sorry to come in. That is the beauty of this product. We don't need any data. What I would do is in my next insurance presentation next week, I will showcase the premiums age bracket wise. So Sudeep sir,
Great.
this is a bigger challenge. The data is a bigger challenge, so we need not gather it. But I'll tell you how we will get the data. So once suppose NITWAA approves, all of you approve that yes, this is the program that we'll roll out. I will build it in a Zopper platform as a tech journey, and then the entire enrollment data will get captured there. So once the person comes into the program, pays the premium digitally and everything, so we'll do payment gateway integrations and everything. That is where we will gather the data and give it to the insurer along with the payment details. Before that, we don't need any data, Sudeep sir.
Oh, okay.
Okay. My question regarding this company employees insurance, health insurance.
Yes, sir.
That company is it doesn't belong to the alumni, but it is it's a company with which I am associated.
Can be done, sir. Can be
Yeah.
done.
Yeah.
Shyam sir will ping my number to you, sir, and you can just connect quickly and it can be done, sir. We'll
Yeah,
connect
please do.
offline on that.
Please do. Sure. Right. Thank you.
What
Thank you.
is the claim settlement percentage from the past data you have so far?
I'll tell you, sir, claim settlement may, so there is IAM Cozy Code data we have of our product. So IAM Cozy Code, we had 6 claims registered, out of which 3 were from existing PED. In that case, the claims got rejected, but we were able to pay a 25 lakh claim because the PED was a deformity and it was not directly linked. So that was an offline thing that we picked up with the insurer. It had no direct link with the ailment for which the person got hospitalized. So IAM Cozy Code, ideally, 3 claims got paid. The total premium was 1.6 crores. The claims paid was around 70 lakhs altogether. That's on the first year. Second year, we have again renewed it this March. And IAM Bangalore, the first year is still running. There are claims which are getting registered and some are getting rejected because of the PED wait period of 1 year, and some are getting paid as well, real time.
Prasad sir is asking, can children of alumni opt super top up if they are even about 25?
The program is to be opted only by the alumni. So the proposer has to be the alumni. That's the configuration of the program.
Right.
Yes, Shyam sir, over to you.
Okay, so thank you for all this details, and I think I like the questions which have come up. I think we got the gist of what Zopper has to offer. I think there were some very good questions on how to deal with the Zopper on top of schemes, etc., which was very good. What we will do is, if we can have some internal discussions between now and say in 2 weeks or 3 weeks, can we have your next presentation?
Sir, I am ready with my next presentation even next week. You can let me know. We will do that, sir.
We'll do about 2-3 weeks so that we allow people to have some kind of a discussion, and they also come back with some questions beforehand, because they have heard now the basic stuff on these offers. Okay, so with that, I think we'll close the call today. Sunday, thank you for everybody for joining in, jumping into the call. Next time we will also decide whether it has to be a weekday or a Sunday. There were some people who opted for weekday. There are some who opted for Sunday. So we'll decide, and then we'll inform you when will be our next call. And then accordingly, we will get into the details. So that time, I think, Paul, we need to just jump into the product details, remain with the scenarios. Give some kind of a scenario to say is, if the alumni is 35 years old, this kind of a situation, then this was the premium kind of stuff, right? So that helps a lot to basically, you can't give for every age bracket, but at least a couple of them, right? So cover somebody in the 30s, cover somebody in the 40s and 50s and 60s. Then I think it will make a lot of connection with the topic. Okay.
Got it, sir. We'll do it accordingly, sir.
Okay, Shyam garu, thanks for
Yes.
this issue here. Yeah, so one thing, year on year, can the alumni change the that plan premium or the deductible amount for the definition 1, 2, or 3?
Sir, you can change, but ideally, I would say that you don't bring it down. You should go for increasing it.
No, increasing only, down, not down.
You
but,
can change, sir. You can.
Yeah. Okay. So meanwhile, we also planning to gather the data. Maybe by the time next week, next meeting happen, no? We may test the water and we may get some more database. We are planning. So hopefully it will go well. Thank you.
Perfect, sir. Thank you.
Thank you. Thank you, everybody.
Thank you,
Thank you so
everyone.
much.
Thanks for